A Tesla stock short seller admits that you should not short Tesla stock, and another Tesla stock short seller admits that his previous argument against Tesla is no longer valid. So let's take a look.
First of all, when do you know when you cut your losses?
Well, it all depends. I mean, like for me, like right here, I have a lot of conviction about the fundamental view of this. And to Karen's point, like, did it deserve to be 102? I don't know. But I started shorting it over the summer at 300. Okay. So like, and covered it at 200. And I was actually very clear about that. And it dropped off the face of the earth. It went from 200 to 100 in a month. Okay. Yeah. So yes, it overshot to the downside. For me right now, I started putting a short out, but doing it through long TSLQ. That is an inverse ETF that tracks the performance of the underlying stock when the stock got back towards 160, okay, had that huge rally. I've been averaging into it.
That probably means that Dan started shorting Tesla stock on January 26th. And he's doing it through this TSLQ ticker. From January 26th, this is down 25.5%.
So I just want to make a couple points about, listen, most viewers right here, most retail investors should never short a stock. You know why? When you buy a stock, it can go to zero. If you short a stock, it can go to infinity, all right? That's not a great feeling. The other aspect of shorting a stock is that it takes a lot of margin in your account to do that. So when I usually use short exposure, I do it through puts, okay? I buy a put or a put spread or something like that. I'm defining my risk.
Dan is actually making some sense here. He's saying that most people should never short any stocks, and I fully agree with him because most companies, even some bad companies, over a long period of time, the stock market goes up. So even bad companies can go up.
But in a case like Tesla right here, if I look at the stock at 209, the at-the-money straddle, looking out a month, okay, that is the call premium and the put premium. I know that sounds, 530 options action a little bit.
Right.
That is $35. That is 16% of the stock price. That is the implied move between now and March 17th. That's crazy. If you're just paying that premium and the stock goes nowhere, you lose that.
Yeah, and then on top of that, most short sellers actually end up losing money when they bet against Tesla stock.
Okay, on one side of it, that's about 8% in either direction. So how am I trading this? How am I risk managing it? Why do I like this TSLQ? Because I'm long something. Most investors know how to be long something. They know how to manage their risk when they're long something. That's my view on this TSLQ. I've been averaging in, okay? And so right now, I'm down about 10% on my average. That's not great, but I know what I think I'm doing here, and I'm not gonna let this thing get out of control here. Is there ever a stock that could get out of control? It's this one. It's the upside and the downside, but that's why I'm not using options. The premiums don't make any sense right here. I'm using this reverse or inverse ETF. I can risk manage it a lot better than being short the stock or being long puts.
If you are going to short Tesla stock, this is probably one of the less stupid ways to do it. It is still stupid, but hey, look, this is not as absolutely idiotic as shorting Tesla stock just outright because your downside is unlimited. You can lose more money than how much money you actually have. Investors that buy on margin could potentially lose more than their initial investment, whereas this single stock ETF, TSLQ, in that regard, we believe is a better mousetrap in that investors can't lose more than they are investing. Although many of them will lose everything that they will put in that ETF. And if you do end up putting money into this and you make money, well, good for you. But to me, that sounds like gambling.
You have been short in the past, Tim. Tesla.
Yeah, no, this
is it tempting at this point with this run since January?
To me, on valuation, the reasons that I was in this trade on the short side, and I was doing it mostly through options, in fact, almost exclusively, was there was a balance sheet issue back then. I thought there was balance sheet, I thought there was absolutely a question about the continuation of that balance sheet. I think there was a lot of things related to just the company's ability to stay in business that were part of it. Right. That's not a question, not even a question.
Don't you just love it when Tesla short sellers admit that their previous arguments are no longer valid? This sounds a little bit refreshing. Sounds nothing like Gordon Johnson. So I can at least respect this guy for admitting that that argument is no longer valid.
Then it became a question of valuation. Look, on valuation, if you can get out to 25, you can make this an 18 times multiple for a company that's so not bullish. If anything, I'm bearish on Tesla here, but it's a very different story for me to be playing from the short side.
Huh? 18 PE? Are you out of your mind? Tesla, even when looking at the consensus estimates, Tesla is going to grow earnings per share by 27% per year between 2023 to 2027. That's the Wall Street consensus estimate. That is always wrong, at least when we look at the historical data. And Gary Black thinks if a company is growing at 30% rate, EPS, that the PE ratio should be 45. If it's only growing at 15% EPS per year, the PE ratio should be 30. So this guy thinks that Tesla is going to not grow basically at all anymore. Does he really think that the Tesla next generation platform, which is likely to be a compact vehicle that is going to be a lot cheaper than the Model Y and the Model 3, does he really think that Tesla will not sell any of these vehicles basically at all? A PE ratio of 18 for Tesla, while it is still growing so much, is absolutely absurd.
Just quickly, if Tesla, a TSLQ, where would it get to zero? How much does the stock have to move
I don't know.
to get to
Listen,
zero?
this is what we spent a lot of time talking about this.
There it is. One thing that you do not want to say ever about anything when you get asked about a stock that you are shorting is, oh, I don't know that thing about this stock. When you are shorting a stock, you are taking, by definition, basically, when you look at historical data, stocks generally go up a lot more often than down. You are taking so much more risk unnecessarily when you could just look for a stock that could make money by going up. And you don't know an important detail? Does that sound to you like something that is smart to do?
This is like one position that I have. Is it not feel great right now being wrong? Of course not. But like at the end of the day, I mean, I'll just say this. This is one thing. And I think this is kind of the thing that investors are not pricing right now. I don't think things get better in 2023 between us and China. When you think about this company's reliance on China from a manufacturing standpoint, access to rare earth materials to make their batteries and access to their consumer, they have less than 10% market share of EVs over there. That quarter was not good in China. If there's any hiccups between us, okay, and China that get worse from here, this is a problem for them. I think 40% of their sales come from China. This is kind of why I'm in this trade right now, and I think this plays out over the next few months.
The risk of US and China seriously not getting along is a risk that all of us Tesla stock investors should consider. However, I don't see that as a problem long term at all. Here's why. Elon Musk believes that the competition for Tesla eventually is going to come not from Germany, not from South Korea, not from Japan, not from US, but from China. If China and US do not get along and become very hostile with each other, and if China goes as far as kicking out Tesla from China, or even worse, then Chinese companies won't be able to sell to countries that are allied with US. That means Tesla's biggest competition is not going to be able to compete with Tesla directly. So while Tesla would lose the market access to China, Chinese companies would no longer be able to sell to other markets as well, leaving a void that Tesla would fill. So while short term, yes, that would be devastating, especially if something seriously happened right now, because Giga Shanghai, that's the single largest factory that Tesla has. But Giga Austin is ramping, Giga Berlin is ramping. There are going to be more factories built soon. So China will become increasingly less significant to Tesla over time. The more time passes by, the less of an impact, even short term, this would have, even if it did happen. And now let's take a look at technical analysis gone wrong.
In these nodes here, so beware of fast-moving prices around that point. Resistance to the upside, purple 250 2-day EMA near about 223. Support to the downside right here near the lower part of this channel, and the 21-day EMA near 176.
Which also conveniently, if you don't mind me, goes right over basically to where you are in that kind of.
Steve Mark Ryan, who was right this whole time. Circles next to each other with a long line extending and coming back, although in a different color. I think that's enough of statistical analysis, I think is what Steve Mark Ryan calls it. No more for today. That's enough. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Matt Postius. Thank you for watching.